This question tests understanding of the manufacturing overhead budget, which includes all manufacturing costs except direct materials and direct labor. Manufacturing overhead consists of indirect materials, indirect labor, and other indirect manufacturing costs incurred in the factory. The key word in the question is except, meaning students must identify the item that does not belong in the manufacturing overhead budget. An important concept is that costs incurred to acquire raw materials are part of the cost of direct materials, not manufacturing overhead. Freight paid to bring raw materials into the factory, often called freight in or transportation in, is added to the cost of the raw materials purchased and is included in the direct materials budget, not the overhead budget. Overtime paid to the workers who perform production scheduling. Incorrect. Production scheduling personnel are indirect labor, so their wages, including overtime, are part of manufacturing overhead. B. Cost of glue used to secure the attachment of the legs to the tables. Incorrect. Glue is generally an indirect material because its cost per unit is small and impractical to trace directly. Therefore, it is included in manufacturing overhead. C. Fringe benefits paid to the production supervisor. Incorrect. The production supervisor is factory management personnel, so related fringe benefits are indirect labor costs included in manufacturing overhead. D. Freight charges paid for the delivery of raw materials to the company. White heavy check mark correct. Freight charges to bring raw materials into the factory are part of the acquisition cost of direct materials, freight in, and belong in the direct materials budget, not the manufacturing overhead budget. Correct answer. D. Freight charges paid for the delivery of raw materials to the company. Exam tip. Manufacturing overhead includes indirect factory costs such as indirect labor, indirect materials, factory utilities, depreciation, and factory supervision. Freight in on raw materials is capitalized as part of direct material cost, so it is excluded from the overhead budget. This question tests the preparation of a cash budget, which records actual cash inflows and cash outflows expected during a specific period. A cash budget focuses on cash receipts and cash payments, not accrual accounting entries such as revenues earned, expenses recognized, or bad debt estimates. The key phrase is, which item should be considered when developing July's cash budget? Students should identify transactions that will result in a cash payment or cash receipt during July. Remember, cash budgets include actual cash payments and collections. Non-cash items, depreciation, bad debt expense, accruals, declarations of dividends, are excluded until cash changes hands. Federal income tax and Social Security tax withheld from employees' June paychecks to be remitted to the Internal Revenue Service in July. White heavy check mark correct. Although the taxes were withheld from June payroll, the cash payment to the government occurs in July. Therefore, this payment must be included in July's cash budget. B. Quarterly cash dividends scheduled to be declared on July 15th and paid on August 6th. Incorrect. The dividend is declared in July, but no cash is paid until August 6th. Cash budgets recognize payment dates, not declaration dates. C. Property taxes scheduled to be paid quarterly during the last month of each calendar quarter. Incorrect. The last month of the third calendar quarter is September, not July. Therefore, this payment is not part of the July cash budget. D. Recognition that 0.5% of July sales on account will be uncollectible. Incorrect. Bad debt expense is a non-cash accounting estimate and does not represent a July cash payment. Correct answer. Federal income tax and Social Security tax withheld from employees' June paychecks to be remitted in July. Exam tip. A cash budget records only cash movements. Include a cash collections from customers, a cash payments to suppliers, a payroll payments, a tax remittances, a interest and dividend payments, a capital expenditures. Exclude a depreciation, a bad debt expense, a accruals, a dividend declarations before payment.